Adamma Mbachu, team lead currency trading at Axis Bank, joins me to discuss activities in the fixed income and FX markets. Adamma, thank you for taking the time out to join us today. Let's start with you bringing us up to speed on market performance so far today before we do a weekly wrap.
Okay, thank you so much, Esther, for having me. Okay, like you said, I'll start with the money market. The market has actually been, there has been a decline in liquidity. We saw the market dropped opening at 52 billion. And as such, we saw that the OBB and overnight rate increased to close at 13.5% and 14% respectively. Like you said, there was no maturities. There was no maturity of the OMO this week. And as such, moving into the fixed income space, we saw a bit of mixed sentiment in the Treasury Bills space. And we saw that later towards the close of business yesterday, the market was quite bullish in the fixed income space, in the Treasury Bill space. And we saw that the rate actually dropped at the longer term maturities from 7.5 levels to sub-7 levels. Going into the foreign currency market, we saw that the liquidity in that market has still been very weak. And then we saw that there was a bit of appreciation day on day yesterday by marginally like 6 kobo, where the market actually IRE rate closed at 14.67. However, CBN has continued their interventions in the market this week. We saw the interventions for the SME and invisibles. We also saw the interventions for the foreign portfolio investors. And then we expect the retail auction result to come in today. Thank you.
Now, just let me quickly take you back to the bond market. In the notes that you put out, you did mention that the bond market was still quiet despite higher bids. What needs to happen for what could be a catalyst for activities to pick up?
Oh, yeah, the bond market was actually, there was mild trading in the bond market, during the week. However, there was a release of the third quarter calendar where they offered 150 billion for 2026, 2037, and 2050 maturities. So the market has been trading cautiously. Like I said, given the drop in liquidity, we saw a bit of sell-off yesterday in the market, where the traders were actually taking profit or freeing up space for liquidity. So we saw the 2036 and 2050 maturities closing at 12.75% and 12.99% respectively.
Now let me take you to the back to the FX market again. I understand that we're waiting, the market is awaiting the results for the CBN to publish the result of its bi-weekly retail SMIS auction today. Where do you see rates? What can we expect in terms of what the results will tell us?
Well, for the retail auction, there have been like depreciation week on week in terms of the auctions. We have seen like a 2 naira depreciation from the spot winnings. So we expect a slight depreciation in the winning rate for the retail auction. However, we still see that the rate will be around the 400 levels, given what has been happening in the FX market.
Now, between the NAFEX rate and the INE window, around 414 on average, would you say this is a comfortable range for the Naira based on current market dynamics, the consistent regular interventions by the CBN, but we know that there is still pressure in terms of from the demand side. The CBN is still trying to clear that black backlog, especially for on the FPI side. But can we say that perhaps Naira has found a level at around this 413, 414?
Yes, you're quite correct. Yes, we expect the rate to remain stable at this rate, at this level, at 414 level, going into the coming week. And given that CBN will still maintain their regular interventions at the various windows, the SME and the FPIs, and of course they will still conduct their usual retail auctions. So we expect the Naira to trade at these levels into the next coming week.